Calling to order the Lake County Investment Advisory Committee on April 16th, 2026. Mr. Treasurer, would you call us to order?
Commissioner Pleshnik,
Yes.
Commissioner McIntosh,
Present.
and Treasurer Zurin here.
Next on the agenda, we have approval of the minutes for our meeting of January 29th, 2026. Do I have a motion to approve, waiving reading of the same?
Motion to approve.
Second.
All in favor, say aye.
Aye.
Aye, it is unanimous. The minutes are adopted. Do we have any old business to come before the committee? Any old business? Hearing none, on to new business with our investment review. Ms. Stanek.
Oh, thank you and good morning.
Morning.
It's a beautiful spring day here. Hope everyone has been enjoying the weather while it's been good. Oh, yeah, I gotta do this. So getting started here, clearly, as we know, things have changed quite a bit from when I was here last quarter. And the biggest change, of course, has been the Iran conflict and how that has created a heightened level of uncertainty in the marketplace, as one would expect. And, oops, I hit the power button accidentally, I think.
Well, we have the presentation.
Okay. So as we look at, oh, she's got me back on. So as we look at really what the market's expectations are for those rate cuts, which had been anticipated earlier in the year to occur during 2026, we can see, looking here at page 3, that the market is now expecting that the Fed will be on hold through the balance of 2026, as opposed to 1 to 2 rate cuts as previously expected. Now, it's interesting because a lot of this and a lot of the outlook for the economy and the market and rates is all driven based off of the expectations for will the war effort be resolved quickly, or will it drag on? Will it have a big impact on inflation, or will this just be a temporary energy price shock? So we last had the Fed meet in March. They, while the war, of course, was kind of the midpoint, and the Fed basically said that they view it as important to just look through the energy shock, to not make any changes in policy at this time based on what is happening. Just let's see how this plays out and see what the data, how the data ends. So at this point, while they did maintain in their forecast one rate cut in 26, another one in 27, we know that this is a fluid situation and can change very quickly. Inflation, of course, is the concern now again due to the increased energy costs, with oil having popped up over $110 a barrel, now down in that $90 to $95 range. We have seen the Consumer Price Index in March increase a bit. We were making great headway towards getting closer to the 2% Fed target, but now with inflation at 3.3%, and the one-year forward expectations are that inflation will land around 3% again for the balance of the year, for over the course of the next year. Of course, we know these numbers always can change as the war effort changes as well. One key component for the U.S. economy is growth. We know we're in this K-shaped economy where the higher wage earners are contributing to economic growth. And the consumer as a whole contributes 70% to economic growth. And one measure that we look at to gauge is the economy still moving along, is looking at retail sales. That's a comprehensive indicator of the consumer spending, and we can see here that consumer spending has been solid. And this, of course, reflects that resilient economy, particularly for those higher wage earners who are driving the economy. Labor market is one of the other factors to consider here, and we know there's been some variation in the labor market data. Unemployment rates at 4.3% here of late. We have had mixed labor statistics with job growth. Job creation has been very weak. The Federal Reserve, one of the banks just recently put out a study stating that they think if the U.S. economy does not add any jobs, in essence, that would be okay. So there's a lot of uproar, I would say, in the market, whether that's really a sound position to take, that we should have no job growth. But be that as it may, one of the factors that we look at is the initial claims for unemployment. This is data gathered from the states. So it reflects folks who, of course, lose their job and then have to file for unemployment. And we can see also that those numbers are very stable. So we're in this environment where no job creation of significance and really not an increase in folks being laid off, this kind of no hire, no fire environment. Interest rates as a result of the Iran conflict have shifted course, particularly when we look at the 2-year Treasury, and even when we look out to 2, 3, 4, and 5, the yield curve is now is no longer inverted. We now have an upward sloping yield curve. With the Fed on hold, as we can see, the blue line or the orange line is the Fed funds rate. That's currently at 3.63%, which is the midpoint of the 3.50 to 3.75% range. But the 2-year Treasury has moved up. Normally, when the movement of the 2-year Treasury precludes or precedes what the Fed will do, we think that's not necessarily the case here, because the movement in interest rates is driven based on a war event versus economic activity, and certainly we don't see any course for the Fed to increase rates, because as we know, that would create risks to both sides of their mandate. Yes, they may try to think they're combating inflation, but the flip side would be they would be harming the U.S. economy. So moving on to the county's investment portfolio here. As we can see, at the end of March, $148 million in cash. That's invested cash between Star Ohio and some local banks. $266 million in securities, giving a total cash of $415 million. We did, of course, break out the engineer utilities portion, as well as the dollars that are invested for the Safety Service Center. Those dollars, that Safety Service Center, that, of course, that balance has gone down as costs have come in as that project is under construction. It's anticipated those dollars will be exhausted by the end of the year, and then project costs will start to be drawn out of the county's, the top half here of the cash and investments. Our weighted average yield on the portfolio jumped up a couple basis points at 3.79. That's a function of the purchases we made in the first quarter and reinvesting those funds at higher interest rates relative to the maturities there. Primarily, most of our investments were in commercial paper and corporate bonds, as we took advantage of those higher rates and that increased spread. Looking ahead to the 0 to 1 year, we have a significant portion of the portfolio maturing here in the next 12 months.
Thank you, Eileen. I really appreciate your breakdown of the investment portfolio, and I do greatly appreciate Meter's and your expertise and experience. I do want to dive into the portfolio and just talk about it briefly. I believe there's a pretty significant opportunity with the Iran conflict to increase the investment return. Right now, the investment return, we're in great position. If you look at the return the first 3 months, we're projected to be somewhere in the 20 million plus range for investment return. But if you really look at the first bucket, the 0 to 1 year investment, and that has a return of 3.53%, there is opportunity. I broke down the maturities over the 30, 60, 90, and 180-day periods, which is about $73 million. The basis point return right now for corporate bonds and commercial paper is about 50 basis points higher. So there's a great opportunity to really maximize and increase the return for the county with short-term investments over the next 6 months. And just wanted to go over the kind of our plan over the next 6 months and see if we can increase the yield and the proceeds coming back to the county. Thank you.
Yes, I think very good point. And I think I will just add on to that, of course, one of the factors that we are always ensuring is that all of the investment activity is in compliance with the county's investment policy and Ohio Revised Code as well.
Thank you.
Okay.
Any further questions for Ms. Stanek? Hearing none, thank you. Any other new business? Any other new business? Well, if there is none, I would entertain a motion to adjourn.
So moved.
Second.
All in favor?